Coming up today, stocks rally on the back of the US-Iran war. Will the Strait of Hormuz get closed? Is the Fed about to cut rates? Hims and hers plunges, Tesla rips higher, and have we seen the last of the US-Iran conflict? It's going to be another big week, guys. Let's go. Who said war isn't profitable? Look at this. Very bullish day in the stock market, proving just how resilient this market really is here. With a good excuse to sell off today on fear-inducing headlines, but it didn't. Not even an outbreak of war between the US and Iran can knock it over. And who knows, maybe if we got a full-blown nuclear war, the S&P 500 can hit 7,000. And this price action just confirms my belief we're still in the great melt-up, and this market could have a lot further to go before finding the top. Pretty much only sector down today, oil and gas energy, with a bit of a risk-on move, led by financials, industrials, and technology shares as well, with Tesla ripping up over 8% after they just launched their robotaxi. I'll get into that later on, and a few other things today to get you all up to speed on what's going on in financial markets here. And so I'm sure you've seen the news today with Iran firing back on the biggest US base in the Middle East, with the missiles being successfully intercepted and shot down, and Trump actually coming out and saying Iran's response was very weak and actually thanking them for giving early notice. Finishing with this classic sign-off, thank you for your attention to this matter. And so it didn't look like we got a weekend taco. It appears he's not playing around. And if this actually works like markets are pricing in today, kind of makes a mockery of prior leaders and their approach to Iran. Because the way stocks are trading today, with S&P 500 reclaiming 6,000, it appears they're treating this as an actual de-risking event in the Middle East. Maybe the threat of nuclear war has actually gone down. And maybe we have seen the worst of the response from Iran, as they've pretty much been cut off at the knees now. US President also came out this morning and said, everyone keep oil prices down. I'm watching. You're playing right into the hands of the enemy. Don't do it. And it appears the market was paying attention. Look at that candle for crude oil today. That is one for the history books. A massive bearish engulfing. We gapped up to $78 a barrel. And why they do these campaigns on the weekend is to allow time for everybody to digest it before markets open. And so a huge amount of selling came in there today, whilst gold pretty much traded like nothing had happened. Still in a tight little range here. Bitcoin actually sold off a little bit in the heat of the moment, but it too quickly found its feet and has popped back up. And so it appears the market has already shaken this off. It was a good chance for a rug pull. Fear-inducing headlines, as the market's been quite complacent for a few months now. But what about second and third order effects from this shock in the price of oil? Will that have ripple effects across economies and markets? Because right now markets are almost excited by the prospect of what's going on, pricing in as if Iran's going to become fully Americanized, or at least very much under control, just like their neighbors Iraq. But let's keep in mind the campaigns in Iraq, Afghanistan, Syria, and a bunch of others were supposed to be quick and clean and wrapped up, and they also appeared that way initially as well, only to be dragged out. And it seems a big tail risk to the oil market, and probably why it sold off so hard today, even though Iran's parliament backs blocking the Strait of Hormuz. But that would just alienate the country that pretty much buys all their oil, China, who also buys a lot of oil from other neighboring countries that ship it through that tight lane past Dubai. And that's probably what prompted China to come out today and issue a warning to Iran. The Persian Gulf and nearby waters are vital trade corridors. They must be kept stable and free from disruption. And hence why I think the odds have plummeted in prediction markets on whether Iran will close the Strait of Hormuz. I think it's so watched and talked about, it's probably not going to happen. But it is still having ripple effects, as we're seeing in the price to ship goods across the ocean, with freight rates soaring. No doubt the risks have gone up, and with millions of consumers already struggling with the cost of living, they definitely don't need the price of gas or oil, a big input into many goods, to even stay at current levels, which could definitely stoke stagflation risks. And what happens if somebody wanted to backstop Iran like the West has done with Ukraine and Israel? No clear indications at this point in time, but we did hear from the former Russian president saying that multiple countries are ready to directly supply Iran nuclear warheads as a result of the US strikes on key Iranian nuclear sites. Pretty bold claim, but at this stage I don't think that's likely to happen, because what happened to Iran could very well happen to Russia as well. Obviously a lot more of a big deal and probably harder to pull off, but the US military did have a successful campaign, throwing off decoys and fake signals, whilst a group of B-2 stealth bombers went undetected inside of Iran after they shut down Iran's communications, and they actually flew non-stop for 37 hours, getting refueled 5 times, leaving and returning to United States soil in the biggest campaign we've ever seen the B-2 stealth bombers conduct. They dropped a huge amount of payload on Iranian nuclear sites. And all that's keeping a pretty firm bid in aerospace and defense stocks. ITA, one of the better performing sectors today, And surprisingly, the airlines, the Jets ETF, market not seeming to discount any disruptions to international travel here. And just moving on to interest rates, pressure is building on Powell to cut rates. With a lot of people in government lashing out at him, and now markets are starting to agree as the data is there to support it. We've just seen a huge pullback in oil today. Looks like this Iran thing is going to cool over. The whole tariff fears doesn't look to be playing out, and we can see that in Fed Fund futures actually increasing their chances we're going to cut next month to 20%, and now looking like an 80% chance we will have a cut by September, something I've been betting on in prediction markets as well. And just looking at government bond yields today, they appear to be reacting as well. 2-year down to 386, which is a bit of a gap now with where the Fed's at. And long-dated bonds TLT actually inching up and breaking out to monthly highs today, along with high-yield bonds continuing to tick up. No risk being priced in here by the credit market. Moving on to hot stocks today, Hims & Hers Health, a big-time retail favorite, got absolutely slammed today. Novo Nordisk cutting off Hims & Hers from selling the lower-priced GLP weight loss drug, actually accusing Hims of failing to adhere to the law. With the founder and CEO of Hims today coming out saying they're disappointed to see Novo Nordisk management misleading the public, pushing back with a number of points and saying that he refuses to be strong-armed by any pharmaceutical company's anti-competitive demands. Unfortunately, that fell on deaf ears, with shares finishing at lows today, down a whopping 34%, and we do seem to be getting a little bounce here after hours as I speak. And just staying on hot stocks, doing a lot better today, Tesla, having launched Robotaxi in Austin over the weekend. Apparently went well, it's getting good reviews from influencers in the industry. Now the market will be looking to how quickly this can be scaled up and challenge Waymo, who are the current leader in robotaxis, already doing more than 250,000 paid trips a week in San Francisco, LA, Phoenix, and Austin, for which Tesla has indicated they plan to expand services there quickly as well, with the expectation that hundreds of thousands of Teslas driving fully autonomously on roads in the US by the end of next year. And so no doubt they should have the tailwind from the White House and regulations. And so that seemed to relieve the market today, that there was no issues, everything went well. Stock up over 8% on really good volume here. And as we know with Tesla, this could be the start of a bigger move, as it typically moves from one extreme to the other. And it's actually pretty much been consolidating for a couple of months now. And we've still got the AI trade well and alive, along with robotics. In addition to robotaxis, humanoids are next up, as we're on the cusp of them going mainstream as well, likely next year. The first versions will be used by businesses and some consumers, with UBS coming out and saying the world will have 300 million humanoids by 2050. Morgan Stanley doing one better, putting that number at $1 billion. The size of the market by then at $5 trillion, twice what the top 20 car makers bring in today. And mega cap tech is still jumping over each other to see who can spend the most in an arms race for compute power and also talent. Now with Meta CEO Zuckerberg offering $100 million pay packages in a similar move to what we see in big sports. Big contracts for big names as he tries to woo in top AI researchers and engineers by dangling big numbers in front of them. And that's actually been one of the better performing mega cap tech stocks of late, while some others like Apple still languish here. And we've still got the IPO market heating up. Next up on deck, America's biggest cement supplier, Amrise, expected to have a market cap of $30 billion, and they may actually benefit from tariffs because it sources most materials domestically. But looking at other hot themes in the market, nuclear having a bit of a pullback there today, along with EV and battery stocks, but space stocks coming back into the spotlight really quick. Rocket Lab launching 9% there today, along with AST Space Mobile, monster run that doesn't stop, and space intelligence company Black Sky, traders' favorite today. Huge volume breaking out. Nvidia still coiling up just below all-time highs. Quantum computing stocks still having a pullback as well. Palantir also coiling up. Hot stock CoreWeave having a little bit of a pullback today, but it was once again Circle Internet Group, the hottest stock in the market. Almost 100 million shares trading hands today, up 10%, still rallying after hours. It now has a market cap of around 52 billion, and that's versus the market cap of 78 billion for Coinbase. And let's not forget, Coinbase actually gets 50% of Circle's revenue from USD coin. And so with stablecoins going legit now with regulation, I think we're getting big institutional money coming into Coinbase, as they should be the long-term winner of all this. And there's a look at Robinhood still, and a parabolic grind up higher as retail trading is on fire now. Another one you want to pay attention to that could be about to become a retail favorite, Hinge Health, operate a digital healthcare company involved in AI, and this one just broke out today on a bit of volume, but still not in the spotlight or on the radars of most retail traders, but it could be. So I'll be keeping an eye on that one. And just wrapping it up, looking at the VIX, pretty much flat here today, just closing below 20. Wasn't a huge vol crush, even though the market rallied. Term structure still holding steady, somewhat flat at the back end, even though we've really dived here on the VIX one day, 13.4. Option dealers not pricing in much movement for tomorrow at all. And we did see a little bit of a jump in the put-call ratio. Traders buying put options today. But overall, still plenty of calls as well. Just looking at the option trading leaderboard, no surprise to see Tesla out in front again, with actually double the notional value that we saw in Spider. CoreWeave's still a big one, coming in third today. And like I said, Circle, one of the hottest stocks right now amongst traders. United Health still getting plenty of volume. And of course, a few others like Coinbase, Palantir, Hims and Hers Health, and other big tech stocks that we normally see show up on the leaderboard for options volumes as well. And that pretty much wraps it up for the daily market review today. Bit of a bearish to bullish flip here. We can see that in the sector trends. Quickly getting back to green on all timeframes for the S&P and the Nasdaq, along with discretionary stocks and high yield bonds. And the S&P reclaiming 6,000. As I said earlier, there was plenty of reason for the market to sell off on these fear-inducing headlines, but it appears to have just taken Trump's cues and shaken it all off like nothing's happened. And as I also said, may actually be treating it as a de-risking of the Middle East, because we're only 120 points away from hitting all-time highs. Along with the market potentially warming up to interest rate cuts from Jay Powell, I think we could be going back into grinding melt-up mode. As usual, we'll play it day by day as we get the price action and data, and we'll see what tomorrow brings us. With the most important event on the calendar this week, PCE inflation data could help cement the market's view on rates. That's all for now. Thanks for watching, and I'll see you back here again this time tomorrow. Cheers.